Okay, good morning, folks. Welcome to Almus Market Mornings, your daily dose of financial updates around the world. This is your host Shikhar Garg, and along with me, we have today Mr. Nikunj, who will be sharing some bit of technical updates for you today. Now, but before we begin with the technical updates, I'll give some small bits of fundamental and macro-based updates for you guys. Now, we are seeing a lot of happening things happening in the geopolitical front. Russia-Ukraine war enters eighth day and the casualties are increasing. Statements of Russia opening fire on one of the nuclear power plants have struck the markets quite heavily. Though the things are under control over there now, but it has raised all the alarms in the market and all risk assets have come crashing. Western nations have continued to heap pressure from the economic side, but there are strong views emerging that Europe will stop gas imports from Russia. UK is also shutting Russian aerospace companies from insurance sector. On the US front, Powell's testimony continues, and Powell told a Senate committee in his second day of testimony before the Congress that Russia's war in Ukraine could hit the US economy from higher prices to dampen spending and investment. There are also reports from Israel saying that a nuclear deal with Iran can be reached, which can neutralize the impact of current tightness in oil supplies. It may also lead to Europe moving towards imposing sanctions on Russian oil export, for which there is intense lobbying across the nation. US 10-year Treasury yield curve has reached to its flattest point in last 2 years. The spread between 2 years and 10 years, which is a key indicator for recession, is at 30 basis point. 2-year yield is at 1.48, while the 10-year yields we can see at around 1.78%. The markets would be looking at NFP data today to have better clues on how the economy is performing. Russian ruble is trading around 11 today morning, and in on the Indian front, we can see rupee showing tendency to break out of the range it was trading in the past 2 days. With some trades happening above 76 today, but the central bank's efforts contained the weakness. Technically, of course, we will be covering that when Mr. Nikunj comes in. It looks like more gains for the dollar are coming in the days, while some prospects of Iran deal may give some relief in oil prices rally. The likelihood of sanctions widening to cover Russian oil exports would keep it elevated. This is on the macro front today, guys. Now I'll ask Mr. Nikunj to go ahead with the technical updates for you.
Yeah, thanks, Shikhar. So this is Nikunj Bharakhda. I'll just share you the views which we shared last week. So on dollar rupee last week, we shared that 75.70 should hold, and ideally we should dip down towards 74.95. But that didn't happen, and it yesterday and day before yesterday, it tried to move beyond 75.70, and yesterday it closed at 75.91. So now that it has closed above these levels, will negate our bearish view of dollar rupee moving towards 74.95. I think the next level we'll watch out for is 76.30. So the resistance, the very next resistance comes to 76.30, and on the lower side, if at all RBI comes, or if we see exporters selling, the next level for importers to buy would be 75.50. So two levels to watch out for, whether at 76.30 we are getting good selling levels, and if at all it is coming at 75.50, that would be the good area for importers to hedge near-term imports. Talking about euro dollar, last time we targeted the level of 1.1050, and yesterday itself it has reached that target. Now it is trading somewhere around 1.1025, and possibly the next target comes to 1.0940. On the higher side, I think if it comes to 1.1140, that would be the ideal level to go short, and only if it is closing above 1.14, that will be the early indication that euro dollar is now moving higher. It's reversing. So the bearish trend in euro dollar continues. I'll now move on to gold. Gold right now is somewhere around 1940, and last time we indicated that 1888 is a very strong support. We still hold that view, but as gold has moved higher at 1940, keeping the stop at 888 looks very big. So we now move our stop to 1910 with a target of 1965 followed by 2000 levels. Uh, so now if at all we get a dip towards 1910, that would be the very good area to go long with a stop loss of 1888. That's it from my side. Handing over to Shikhar.
All right, Nikunj, that was quite crisp, and hope we now know where to act and how to act, at least on the price level front. Now, the thing is, guys, there is a lot of uncertainty, so we believe you guys are keeping management as one of the priorities for all your activities. The geopolitical tensions does not look like subsiding, so hope you guys continue with risk management quite strongly. Till then, we take goodbye. That's it for today, guys. Thank you so much.